Welcome to Realcast, the weekly roundup of the real asset markets. My name's Richard Betts, and I'm joined by Paul Strome and Dan Innes. Dan, let's start with you. What's your kind of pick of the highlights of the week?
Last week, I've been following the story of the real estate investment manager, Mark, formerly known as Meyer Bergman. They've partnered with Credit Suisse and their asset management team to buy and manage Resi assets in Europe. They've teamed up to create a new platform to be called Doma, and that's going to target an initial portfolio of 250 million euros across Germany and the Netherlands. And that platform, which is intended to kind of buy and manage smaller scale city centre Resi assets, it's been already seeded with about 700 units under management. There's a plan that they've got to expand that portfolio to hold up to €1 billion worth of assets across Europe, with Doma forming a key part of Mark's multi-platform strategy, which was, of course, part of its rebrand and positioning, which took place at the end of October last year. That includes specialist vehicles that were targeting new opportunities in UK Resi, urban logistics, life sciences, and luxury retail. And if you remember as well, or Meyer Bergman back then, but in May 2020, they also created that European last mile logistics platform, Crossbay. That's going to invest up to €2 billion worth of single tenant assets. So Mark's been particularly busy because, in addition to Crossbay, you'll remember they were one of the creators of Via Outlets, which they later sold 100% to APG in September. And it also launched that Greater London focused housing platform, Meyer Homes, as well as Promenaden, the asset management platform that manages nearly 900 million euros of prime properties in central Oslo. So it's interesting that Mark have invested into this new Resi Domus vehicle, because, of course, with that rebrand, they did move away quite heavily from retail, but they're now managing over 7 billion euros of assets, and they last acquired a pure play retail asset in 2014. Sticking with Resi and back to London, Property Week reported that the US co-living brand Common is to make an entrance into the UK market. Common is one of the biggest names in co-living in the US, and they operate over 7,000 units across 15 cities with flexible leases. That's partly as a result of taking on sites from competitors like WeWork's WeLive. Although 7,000 is still a bit of a minnow by German standards, but the UK market is catching up rapidly, with many of the biggest pension funds amassing much larger portfolios, as we've been following here on Realcast, of course. But Common's going to operate 5 London sites initially, spread across the capital. Quite exactly where they are is a bit unclear from the Property Week article, but they're going to comprise a mix of co-living and traditional build-to-rent assets. And Common's also going to seek other open co-living sites in Madrid and Dublin by the end of 2023. And then back to an interesting story that was picked up by Sarah Butler in The Guardian, was that independent retailers and food outlets are stepping into the gaps left by chain stores in the UK's high streets, because we've seen so many gaps and vacancies from CVAs, administrations and other reasons. And, a net total of over 800 locally run convenience stores, barbershops, bakers, cafes and fast food joints opened in the first half of 2021. And the number, though, contrasts quite heavily with a net of just over 5,000 chain stores, hospitality and leisure businesses that closed down during that same period, as more small business owners kind of venture into the high street. But LDC, local data company, they said that independents had benefited from government support measures such as business rate relief, which enabled them to remain open and capitalize on that, cheaper rent deals from landlords as their bigger rivals kind of stumbled. Just to give a bit of an example, Richard, about half of the Arcadia stores have been relet since they exited the high streets at the end of last year. And, they've mainly gone to independent operators. And then lastly, the world's largest floating office building is going to open in the Netherlands quite soon, where unsurprisingly, its tenant is going to be the Global Centre for Adaptation. And it's going to be anchored in the harbour of Rheinhaven in Rotterdam. And it's quite large. It's 48,500 square feet over 3 floors. And there's going to be a partnership with the Centre of Adaptation to lessen the impact of climate change, and particularly in a country that's below sea level. But interestingly, they've signed a 10-year lease, Richard, and after that, it might float on to another tenant.
Paul, any more floating offices from your side this week?
Not quite, but another story that looks at picking up the fallout from the pandemic. I was interested to see that private equity firm Alchemy Special Opportunities is backing asset manager Tri7 to the tune of £100 million in a partnership that will invest £250 million into value-add opportunities arising from COVID and the disruption that it's caused in UK high streets. Tri7 was formerly known as Scape Real Estate, has already acquired a 200,000 square foot shopping centre in Leeds city centre known as the Core, and that's a smallish centre with 30 shop units. Tri7 said it's looking for shopping centres, retail parks, office blocks, as well as portfolios with a focus on assets in the UK's regional cities and town centres. And the company plans to generate value either by repositioning property, refurbishing it, finding alternative uses, or redeveloping to higher value uses such as student accommodation or residential. The ULI commissioned the International Real Estate Business School in Germany to answer the question, how we live in our cities after Corona. Increased public space, more mixed-use buildings, and greater flexibility in planning law are among the key requirements for future development of cities in the post-pandemic. They also pointed out that as the main actors for urban development are public institutions and private investors, that the reconstruction of cities can only succeed in partnership. Not all the pressure for change can be attributed to the health crisis, and they said that it pointed out that cities are becoming greener anyway, not just because of the pandemic, obviously, but because climate change is forcing it. The study also found that about a third of respondents expect cities to physically expand, so redensification remains important. Participants indicated that the greatest challenges arise in the redesign of public spaces and in the conversion of existing properties. And to overcome this, the planning law will have to become more flexible, and both private and public capital will have to be mobilised. Physical expansion of cities will be required as well as densification. Elsewhere, in London, in Canada Water, in Docklands, a new engineering higher education campus co-founded by 3 global universities opened at British Land's Canada Water development. TEDI London, TEDI London, has been established by King's College London, Arizona State University and UNSW Sydney in an unusual building which took just 6 weeks to construct. It's a modular building composed of lightweight steel frame boxes clad with insulation. No deep piles or concrete required, and at the end of the life, the building can just be reused on site or recycled.
Yes, it's interesting to see how that development is working there in London. I also noticed that Patrizia joined forces with Whitehelm Capital, obviously they're in the infrastructure space, and that Wolfgang Egger, CEO and founder of Patrizia, highlighted, as well as there being a strong cultural fit and strong track record, that both share a clear commitment to sustainability and making an impact. And that certainly came through very clearly in the session that we held looking at infrastructure, and particularly in this case, the data and digital infrastructure. And was really interesting to get the perspectives of PwC, the City of Glasgow, as well as Whitehelm Capital on that topic. And it was a busy week actually for events. We also focused on the senior housing and healthcare sector with an SHHA briefing, particularly looking at emerging markets. And again, impact was a very big part of that. And also a focus on the Netherlands, where there seem to be lots of opportunities there in terms of investment and growth. So really interesting to see some of these markets coming back, and you can pick up all of those online on demand. So if you missed those, do feel free to watch them. Thanks very much for joining us. Thank you, Paul. Thank you, Dan, and look forward to seeing you next week for our regular roundup of the week in real assets.